I just want to talk about a lot of things that's happening in the market that everybody's so uneasy about. We want to, I want to ease your minds about certain things. I want to tell you the truth about certain things. Being a finance person, I understand what effects certain things have, and I also understand what does not make sense. Like there's a lot of things in the market right now that we as economists or accountants or financial people that it does not make sense. It does not make sense why we're doing certain things or how it's going to get better or how it's not going to get better. So first, I'm going to talk to you about the actual markets and what you should be doing and what you shouldn't be doing. So a lot of people come to me and they're like, I think I'm going to stop contributing my monthly contributions to my Roth, or I'm going to stop putting in my monthly money in my regular IRA, or I'm going to stop putting in money. Don't stop putting your money in. Do not stop putting your money in. If you are invested properly, which you should be from the beginning, and you're not like high risk investments like derivatives or Bitcoin or something like that, then you should not stop. I explain it to one of my clients like this. She's like, "Do you think I should sell?" Number one, no. You shouldn't sell, because I explained it to her like this. I said, your house, when the market was low, you've been living in it for 15 years. If you did you sell your house when things were lower, when it was $200,000? No. Okay. So did you lose? No. Now your house is $400,000. Right. So you didn't sell. The market was low. You did nothing. You sat on it. Your house is now $400,000. You didn't lose. You used time to your value. This is what the difference is. It's the timing. It's the time. If you have the time, you don't need to do it. So that's just like your 401k, your regular investment account, your Roth, anything like that. If you're putting money in the market now, you're putting it in and you're getting more for your money because you're buying things at a lower price. The market's on sale. So do I think it's going to go lower? I have no idea, because of what's happening. And the uncertainty is the part that's killing me. I can't tell you because of the uncertainty. So that's something I cannot explain as an economist. But you're buying low, so I say continue to do exactly what you've been doing. Put your money in, make your contributions, buy low, keep doing what you were doing. Do not do anything. If you have the value of time, if you have the luxury of time, then you do not sell. You keep contributing. You're buying low. The market is on sale. That's what we're talking about. The market is on sale. You just continue to coast on it, and you continue to buy, and you continue to do that. So that's my advice. My advice is you do nothing. You ride it out. If you are a long-term investor, you do nothing. You don't stop doing what you're doing. You don't do anything. You don't sell anything. You just continue to buy, continue to dollar cost average. And in the long run, I don't know how long the run is, because that's the uncertainty part. But if you're willing to wait it out, in the long run, it's going to work out for you. In terms of the markets, I know a lot of people are scared right now. And I know a lot of people are like, okay, what do I do? Do I stop? Do I continue? Do I buy more? Do I buy Bitcoin? What do I do? So I am a conservative investor, which means that I take calculated risk. Calculated risk means I have a reason for everything I do. So when I am investing in the market, I understand that the company is a strong company. How do you know that a company is strong? You believe, number one, a lot of the times you need to look at what you're doing. What are people doing out there? Like, what are kids using? What are you using? What are the things that you use? For example, you use the iPhone. Apple is one of the strongest stock on the market. A lot of people are like, oh, where's Apple going? Where Apple should it going? And I'll be honest with you, with Apple, I have had Apple since pre-COVID. And when the market went really down during right after COVID and when the last administration, Apple was the only stock was green in my portfolio of over 50 stocks. So it has withstand lots of market volatility. It has withstand lots of market things because in my opinion, I talk to the kids, I talk to my kids, I talk to other kids. And I ask them, why do they like iPhones? Why do they like, Apple computers? One of the reasons, one of the biggest reasons is Apple is always keeping up with the technology. You always see there's an update as opposed to Android. You don't get a lot of updates from Android. Apple's, yes, there are bugs. With technology, there's always going to be bugs. But the point is you have to figure it out and you have to fix it. So that's one of the reasons I like that company is, number one, we use it within our household. Where, most of the stocks that I have are stocks that I understand what the product is. And for some reason or another, we are using it within our realm, within our life. So a lot of the times I go with my gut and understanding. If you are an investor that's not a finance person, I go with, what am I using? Hey, and then sometimes that doesn't work. So for example, I invested in a stock called ChargePoint. And I thought charging stations for EVs were a big deal, but then ChargePoint kind of got priced out of the market because there were other chargers and other things that were working for it, and that stock didn't do that well. So that's one of the stocks. There are some stocks that I've invested in that are not doing that well, but the company is solid. So I know in the long term, I'm getting a dividend out of them, most of them. So they give me dividends. Dividends is what, like interest. So, and on top of that, in the long term, they're going to work out. So my point is, yes, the market is unstable. Yes, I feel like we're swinging from like a trapeze when it comes to what's happening. And I heard this saying the other day, and it says, are we investing in companies or are we investing in tweets? I mean, that's kind of an uneasy saying for me, but I kind of feel like that sometimes. So that's why I'm staying put. I am not really doing anything. There's only one stock that I sold before all this market downturn happened, and I sold it because I didn't believe in the future earnings of that stock, and that's why I sold it. And I didn't believe that they were going anywhere with it. They weren't unique anymore, and I sold it. Other than that, I still keep my portfolio. It is swinging on a trapeze, but that's the thing that you got to do. You got to hold your nose and wait it out. If you can wait it out in the long run, if you're invested in proper things, it's going to be worth it. It's going to be worth it. Just like I've told you guys about housing, it's the same thing. If you can wait it out, in the long run, it'll happen. Don't stop doing what you're doing. Don't stop. You have the power of your purse. Yes, we have to adjust our purse, meaning we have to adjust our life to fit what's happening around us. But in the long run, we are the ones that have that power. So we need to adjust accordingly, and we need to understand what our own realm is. If we're the type of person that's okay, just gonna sit out and wait on the side, then you're gonna lose out on some of the turns in the market. So I honestly, if I had a little bit more cash, I would be putting in a little bit more. I do have some cash. I haven't started putting it back in yet, but I am thinking that time is going to be really soon. So I definitely say, if you are invested in the market or you're wanting to invest in the market, don't stop investing it. What does dollar cost average mean? I know you guys hear me say it a lot. It means that if you buy a little bit every month or every time, then you're going to catch some of the market swings. When it's up, you're going to buy some stuff down. You're going to buy some stuff down. But in the long run, you're averaging out. As opposed to if you just put in $10,000 at one time, then, you're either going to be buying high or buying low. And that's with dollar cost averaging, you're more more even keel, and your chances are that your investment amount is, you're going to be catching the market with an average investment amount. So that's the best way to do it. Always try, you will always hear economists say or investment advisors say that you should be dollar cost averaging. That means you put a little bit every time and you just let it ride. So I hope you enjoyed today's video. I know a lot is going on in the economy and it is very confusing. If there are any questions that you have for me and you would like for me to discuss, please leave a comment below and I will do a video on it in the near future.